South32's posted a jump in half-year profit, driven by higher sales of aluminium and copper, as well as strong commodity prices. The diversified miners' headline earnings have come in at $385 million. That's a near nine-fold surge when compared to the prior period. CEO Graham Kerr says South32's delivered a strong start to the financial year and that it aims to continue the strong performance into the second half. South32's declared an interim dividend of 3.4 cents per share. British American Tobacco's flagged significant headwinds in Bangladesh and Australia in 2025. That's due to new tobacco regulations along with increases in excise and VAT. That warning accompanied its year-end results. Revenue for the period declined by 5%. BAT cited the sale of its businesses in Russia and Belarus as well as translational FX headwinds. Its bottom line fared a bit better. Despite taking a hit from a long-running lawsuit in Canada, BAT's posted profit from operations of close to £2.8 billion. That's from a loss of over £15 billion previously. Sibanye-Stillwater CEO Neal Froneman is set to retire. That will take place at the end of September. Richard Stewart, currently Chief Regional Officer for the Southern Africa region, will succeed Froneman. He will be appointed as CEO designate from next month. Sibanye says his appointment follows an independent best practice succession process overseen by the board, during which a number of external and internal candidates with appropriate industry credentials and experience were critically assessed for the role. Italtile flagged higher interim profit. The retailer and manufacturer of tiles and bathroomware says its headline earnings per share could register an increase of up to 6.7%. It has not elaborated on that forecast. However, more detail will be provided when it opens its books in March. Caxton's also eyeing an improved interim performance. The printing and publishing group says its headline earnings per share could increase by at least 9%. It's pointed to improved trading profitability in a difficult trading environment where revenues declined marginally. It says this was mitigated through operational efficiencies and cost control. Mining production slipped again. Output for December declined by 2.4% following the previous month's near 1% drop. The outcome was markedly weaker than consensus expectations, which had anticipated a pickup in activity of 1%. The largest negative contributors to this print were lower PGMs and gold output. In international news, Sony raised its operating profit forecast for the year ending in March by 2% to $8.70 billion, citing the strength of its gaming business. Here's more detail in this package report.
Sony has lifted its outlook for the year. The Japanese giant said Thursday it now expects profit to hit $8.7 billion, some 2% up on earlier forecasts. Operating profit over the latest quarter also beat expectations. And it's all largely thanks to a strong performance in gaming. Sony sold 9.5 million PlayStation consoles over the quarter, more than 1 million up on this time last year. Overall profit at the gaming division jumped by over a third as a result. Sony also saw 10% more people using its online PlayStation network. And the company's music unit enjoyed a good quarter too, as revenue from streaming rose. President Hiroki Totoki is now strengthening his grip on the company. He's due to take over as CEO from the start of April, having previously been finance chief. Once best known as a maker of consumer electronics, Sony has been steadily expanding into games, music, movies and other content. As part of such moves, last year it agreed a capital tie-up with Kadokawa, the Japanese media powerhouse behind gaming titles like Elden Ring.
And Unilever has announced that it would demerge its ice cream business and has chosen Amsterdam to be its primary listing venue. The announcement sees London and New York being secondary listing locations. Let's take a look.
Ben & Jerry's maker Unilever said Thursday it would spin off its ice cream business and picked Amsterdam as its primary listing venue. The announcement sees London and New York made secondary listing locations. The decision is likely a blow to British Finance Minister Rachel Reeves. She has reportedly met Unilever to discuss the listing of its ice cream business. Her office did not immediately respond to a request for comment. Unilever announced its listing plans alongside annual results and a $1.57 billion share buyback. The plan to demerge its ice cream business is part of CEO Heinz Schumacher's aim to cut costs at the company. The ice cream business includes the Magnum and Walls brands and made turnover of $8.62 billion last year. Although the listing could be complicated by Unilever's contentious relationship with the independent board of Ben & Jerry's, it accused its parent company of suppressing a social policy statement the US ice cream maker wanted to release because it mentioned President Donald Trump. Unilever also reported fourth quarter underlying sales growth of 4% on Thursday, a touch below forecasts. The British company expects a slower start to this year due to subdued market growth in the near term, but it forecasts its 2025 underlying sales growth to be within its multi-year range of 3 to 5%. Investors weren't initially excited by Thursday's news though, and shares sank 7%.